All right, so we had a lot of big things happening in this past week, but I think the biggest one getting started here, the Bitcoin halving finally came, and it was expected to come today on Saturday, but it actually came a little bit early on Friday night. And again, this is very, very bullish. Again, everybody knew it was coming, not that in general, but one thing that quietly happened that not a lot of people are talking about is the stock market had a very bad week, the worst week in, I think, probably since October or November. And not only that, the tech stocks were the ones that were hit the hardest. And something that you hear a lot is, oh, Bitcoin's just, it's just the same as the NASDAQ, pretty much, is what a lot of people say, especially the haters. And again, quietly, Bitcoin was basically flat on the week. Actually, I think it was up slightly, depending on, at least when I looked last night. And again, the NASDAQ got absolutely destroyed, down, I think, a little over 5%. NVIDIA was down like 20% on the week. And again, Bitcoin was up. So again, it's just 1 week. I'm not going to be Peter Schiff and pretend that 3 days is enough to draw massive conclusions that, oh my God, gold was better than Bitcoin for a 3-day period. Therefore, it just definitively proves that gold is better. Again, that's a stupid argument, but at least to some degree, it does deserve some note. Because again, when you had the NASDAQ get destroyed, but Bitcoin was all right, something to keep in mind. And again, another important thing too to keep in mind is Bitcoin has never been above its previous all-time high prior to the halving. The all-time highs come usually a year to a year and a half after the halving. So I think that we are still very early. I think that, again, over the next 6 months to a year, we go over 100,000, and then we probably hit 200,000, 300,000, 400,000 over the next couple of years. And again, if we keep getting ETFs and we keep getting more institutional adoption, we probably don't get as big of a drawdown as previous bear runs, if you want to call it that. So again, nobody knows what could happen. We could get some major crash that is bearish. Again, nobody knows. But going off the probabilities, the more institutional adoption we get, the more bullish it is. And not only that, the less bearish the down runs will be. So again, like I said, nobody knows, but again, I think this is something very important to point out here, that Bitcoin, I think we're still in the very, very early stages. Like I've said time and time again, until we get the institutional adoption, until it's standard for financial advisors to recommend a 1, 2, 3, 4, 5% allocation, until it's standard for pension funds, for corporations to have a percentage allocated to Bitcoin. I mean, you've had people even say, okay, you could get, a whole extra sector in the stock market being, I mean, some people say crypto, some people say Bitcoin. It doesn't matter. Until stuff like that starts to happen, that's when I'll start to think, okay, maybe the glory days are over. But until that starts to happen, I think that Bitcoin will easily outperform the market. So as far as the market goes, again, we had NVIDIA, again, we'll start on NVIDIA because it was basically the biggest mover this week, down massively. Again, since its all-time high, it's down over 20%. On the week, it was down, I think it was basically double digits roughly. Let's see here. Yeah, it was down about 15%. So the vast majority of that drawdown coming in just the last week. And again, I think that this is a sign of things to come. I don't think we're going to see a major crash personally, but I do think we're going to see a nice pullback. And again, NVIDIA still is very expensive. It still has a price of free cash flow of like 70, price of sales of 30, which again, both of those numbers just crazy. It's still way too expensive. The NASDAQ and the S&P, honestly, I'm going to start dollar cost averaging again because I think we're at more reasonable levels right now. I would preferably like to get it like another 5 to 10% cheaper, but I think that we're at more reasonable levels right now. We're probably maybe still slightly above fair value, the market as a whole, but I think we're at more reasonable expectations where we're at right now. Again, the NASDAQ down down about 6% on the week. The S&P was down about 5, just over 5, I believe. Actually, I think it was a little below 5. Let's go check and see here. So the S&P was down, actually just under 4. So again, the NASDAQ down a lot more than the S&P, which again is interesting to point out. So like I said, Bitcoin, again, the tech names were down big time. Why was Bitcoin not down? I thought that they were basically one and of the same. This is what the haters like to tell you. But again, no, it's not true. It's just people that don't know what they're talking about, right? Or people that are trying to lie to you. So again, that is the market going forward. And again, what do I think is going to happen? Again, this is exactly what I said. I was saying basically since the start of the year that I thought that we are going to see a good pullback in the spring or in the summer. Now again, we are in the spring. This is exactly what's happening. I think that again we see a pullback, in my opinion, probably in the 10%. That's probably roughly what I would set the over/under at. I wouldn't expect anything more than 15 or so, 20 at the most. And again, for all we know, we've already seen we may go up from here. Nobody knows. But I think there's going to be two factors that we're going to have to keep a very close eye on. Number one, earnings. We are in the midst of earnings season. If it's weaker than normal, that could be very concerning for the markets going forward. And the other big one is the inflation. The next CPI print will be in, I think it's May 15th. If inflation continues to tick up, that's something that could be very concerning, because if inflation goes up, that's going to put pressure on the Fed to raise rates. And I think that's a very, very bad thing to think about, because I don't think the government can afford to maintain the debt with current rates, let alone higher rates. So that's going to be something that's very concerning. If inflation continues to go up, or even to some degree stays where it's at right now, that's something that could definitely be very, very concerning. So that's something to keep an eye on. So as far as earnings goes, we did have some prominent companies release earnings. United Health was up very nicely. They had good earnings. Again, you look at the market as a whole, was down a lot, but look at how much United Health was up. United Health was up about 13%, which is crazy considering how big of a company they are, and they're supposed to be a more stable company. So again, they released very good earnings, very good revenue growth. So again, that is United Health. Again, I don't mind United Health. I do have a very small position in United Health, but honestly, I'm not really looking to add to it, because I think that although it's a very good company, I think that the government easily could regulate them, and that would hurt them a lot. The next one is Johnson & Johnson. Again, they beat earnings per share and sales. I don't have a position, and I don't think I ever will have a position, because it's just too boring. I don't think, again, it's a consumer... And not to mention, too, I don't really like the industry that it's in either. I think that, again, the pharmaceutical industry, again, another industry that easily could be regulated. Again, not something that I'm super interested in. And I don't think that this company has any major tailwinds. And I don't think it's even really possible for them to get major tailwinds. So the next one is United Airlines. Again, another company that they did beat revenue and earnings. They were also up very nicely on the week. Again, we did have several companies that are good, I wouldn't say the best indicators, but pretty good indicators of how the economy as a whole is doing. The airlines are one of those indicators. And again, this is good news that United is releasing good earnings. Next one, ASML, a company I very much do like, that I really do want to take a position in, but it's too expensive. It released good earnings, but it did miss revenue. So again, it was down quite a bit on the week because of that. If we look at its current valuation, it's still way too expensive. PE of 40, that's expensive. Price of free cash flow of 97, a price of sales of 12, still way too expensive. It's still going to have to come down another, probably, I don't know, at least 10%, probably 15, 20% before I would look to buy. So again, it's just too expensive where it's at right now. The next one is Abbott Laboratories. Abbott Laboratories, again, they did beat their earnings, which again, a lot of people are probably wondering, okay, well, if they beat earnings, then why were they down on the week? Well, that's because they lowered their guidance. So that's something to keep in mind, is that a lot of times companies will beat earnings, but the stock will be down, and typically that's because they lowered their guidance, basically saying, yeah, we're not expecting to do as well as we thought we were going to do going forward. So that's the most important thing when it comes to investing, is that how things are currently is already priced into the market. It's already priced into virtually every stock. The big question is what's going to happen in the future. That's the big question. So that's something that you really need to keep an eye on. Crown Castle, earnings were down, revenue was up. They were down a little bit on the week. Again, a company that it has a very high dividend, which makes people very, very interested, but I don't think it's good enough. It just doesn't make the cut in my mind. The next one is Equifax. Equifax, again, another good barometer of, again, how things are doing. Equifax, they did beat earnings and revenue, but again, another example where I think they lowered guidance and they were down a little bit. And again, I think that a higher rate environment probably is going to be bad for a company like this, because the lower the rate environment, the more people are going to be borrowing, the more economic activity we're going to have, which means it should be good for a company like this. So again, another company to definitely keep on a watch list. And again, I do think it's a very solid company as well. But again, not quite good enough, in my opinion, where we're at right now. The next one is BMI. This is another company that I'm very interested in. I don't have a position in, but I would like to get one at one point. Again, they did beat earnings and revenue. How they did on the week, though, they were actually up quite a bit, which is actually kind of surprising. Again, they're an electrical equipment company. Again, like I said, I really would like to get a position, but they're just too expensive where they're at right now, and they're probably even more expensive now. Yeah, price to free cash flow of 52. That's just way too expensive, right? Way too expensive. Very good company, but again, very expensive. The next one is D.R. Horton. Again, another a good barometer. Again, how things are doing. Again, one of the big home builders. They did beat earnings and revenue. That, I believe, they were up on the week. Given that, actually, no, they were actually down a little bit. So I think that that's probably more or less due to rates projected to be higher for longer. And I think that that's going to weigh on some of these companies if that continues. The next one, Netflix. Netflix beat earnings and revenue, but they were down, right? They were down. But and again, I think that that's just because the market as a whole was down. Netflix, honestly, I'm not a big fan of Netflix. I'm not sure. No, again, I think they're a half decent company, but they have no moat whatsoever. They have a ton of competition. This is one of the main reasons why I don't like Tesla and why it's not a good idea to invest in a company like that, in my opinion, because competition is very fierce, right? You don't want to be investing in companies that have fierce competition, because that means it's very easily to take business share, or so just not a great industry, in my opinion. The last one, American Express, they did beat earnings and revenue, and again, they were up. Again, American Express has got to be at a new all-time high basically right now. Let's see where they're at here. Yes, they broke out again. So American Express, again, another very good company in my opinion, but they're too expensive where they're at right now. Let's see where they're at. They're actually a little bit below their historical price to free cash flow, but they are above their historical PE and price to sales. But honestly, based on these, just bird's eye view here, if they came down like 5-10%, I think they probably would be a buy where they're at right now. Again, at least where they're at right now. This is, again, another one of Warren Buffett's favorite companies. I don't think he's added anything to his position in a long time. But again, these kinds of companies, they're very good companies. The MasterCards, the Visas, the American Expresses of the world, because they're very profitable, and they have to spend very little money to make their money. That's another very overlooked aspect of investing, is how much money do you have to spend to make money? And companies like this have to spend very little. So that is this week. Again, we're still early because we haven't had any of the real big hitters release earnings yet. And that's something that I think could sway the market. Like if a Nvidia or Amazon, Apple, Google, like if one of these companies releases poor earnings, that could really bring down the markets. And honestly, I think that's probably wrong. I think we probably have a slow step down until the next CPI. That probably will be the catalyst. If it's down, then the markets probably trend back up. If it's higher, then that probably is a catalyst to go even lower. And again, that's about just over 3 weeks away. So that's kind of my predictions on the market. Again, I've nailed it this year. I've been right on. But again, I don't think it takes a genius to figure it out, because I think the writing was pretty much on the wall. So my prediction is, I think that we still are going to go up later in the year. Now, again, does that mean that we hit a new all-time high? I'm not sure. Probably 50-50. I think that, again, it all comes down to the CPI. What happens with that going forward? I'll put it this way. If the CPI is lower in 6 months than it is today, I think the market's going to close higher on the year. If it's higher, then I think we probably have seen or are in the midst of a even larger pullback. Like if it's higher, if it's like 4.5%, 5% in September, October, November, we're probably I would say probably 10 or 20% lower now than we are now. So that's the big catalyst, right? That is the big catalyst. What is going to happen with that going forward? I think that it's extremely likely that we do not get to 2%, right? The Fed wants to get to 2%, but I don't think that's going to happen. I think the big question is, where do we settle? Because I think we're going to plateau at some point. My opinion is I think we're probably going to settle roughly where we're at right now, right around that 3 to 4%. And that's going to be very hard for the Fed to manage and for the government to manage. The real solution to this problem is the government stops spending so much money. The real driver of inflation is government spending. If the government stopped running so many garbage deficits and let the market take control, the problem would go away. The problem is people don't want to vote for that. The Fed doesn't have as much power as people think. That's another very important thing. The Fed does not have as much power as people think, because the market has the power at the end of the day. So anyway, that is this week in earnings, the news. If you liked the video, please like, subscribe, comment, all that good stuff, and stay tuned for more.